Good day, traders. I trust you're well. Welcome to broadcast number 2, OZN. I think it's quite fantastic that the strategies that we have learned within the AVZ of trading, the asset valuation zones of trading, are applicable to any asset. Last was an index, and here is a currency. Beautiful setup on OZN. And I think you can go check this out for yourself if you want. Now, our strategy number 2, set up pristinely. Here we have high of yesterday, low of yesterday. So, of course, down here we have the lower asset valuation zone. Remember, it's a bit of an overlap, but this is the lower asset valuation zone. And up here we have the upper asset valuation zone. And there are the 3, 2, 5 revaluations. Static asset valuation zone set up here yesterday. Static asset valuation zone set down here yesterday. And of course, as market is unfolding, we continually see how the market is shifting, or might shift from the upper to the lower, or from the upper, higher, lower, lower. So 3 revaluations. Higher prices were rejected there, rejected there, rejected there, rejected there. Not no opportunities for us to trade. Really during the Asian session, which is interesting. OZN, Asian session currency pair, or Asian part of the world. But here's what's interesting. After these 3 rejections, we still had the low here, right? Remember, the upper asset valuation zone is a sell zone. So the bears eventually broke out below. And they basically said the asset is too expensive and they want to decelerate the price all the way down to 0. That's where they want to go. The breakout looks weak. If you're going to sell it, still a breakout, right? If you're going to sell it, you need to use a wide stop or wait. When I say a wide stop, don't put a stop in the middle of nowhere. Your stop has to be up here, because unless there is strength immediately, there could be a pullback, right? You don't want to get pulled back and stopped out with your full risk. Okay, remember our process with risk management. Use the stop up there. As soon as you are in, you take any of these, you can start to take off half the risk and manage your trade. So if you've taken that and held your stop above here, depending where you entered there or there, minimal loss, you would have been stopped out, spread, which is fantastic, no problem at all. But if you said, well, I don't like that breakout, I'm going to work. And guess what to get, guys? If you go to your notes and strategy number 2, the 4th one talks about tightly contested revaluations all the way back to test the average price. So they tested the strength, strongest traders, 10 EMA, tried to break through, failed. They tested the 20 EMA. Had we broken above that, then we know the bears are completely, have lost this particular cause at this moment. By breaking above means they haven't closed. But look at this. This is Asian session. This is way into the London European session. No trades until you get into the US Open. Okay, large institutions at the US Open, they said, well, we agree with everything that has taken place. This asset is too expensive. Let's sell off. But there was a problem with this candle. If you look at the signals that we trade, we don't want a candle at the open with tails above, tails below. So all it means is we must just wait. Now, the first candle, it's got its high and its low, and there is measured move of it. So, of course, if the bears are strong, they want to target the lower asset valuation zone, because they're saying it's too expensive, so they want to drop it and get down here and maybe keep on selling. Remember, they want to decelerate all the way down to 0. So after the multiple revaluations to test the average prices, this is exactly fitting into strategy number 2. Problem with the open, but good follow through. So that's a candle that would be a signal for us to trade. It's got at least 1-to-1 to this level, okay, which is a measured move of the first candle. So that's, you got to get it, have at least 1-to-1. There's no point taking that, because you don't have enough time to manage your trade. So you take that trade. Once you are in the trade, stop is above here. Okay, don't put a stop there. We never do that, guys. There is a stop. Take off half the risk here and watch and see what happens. You get a follow through candle, you can put your trade above here. Now you're almost at break even with another follow through, and you know there is the level you're concerned about. Bring your stop here so you're at break even, and then you watch. If you're going away, take your profit here. But if you stay in, wait and see, there could be a bit more, right? Bears breakout, and then immediately we pull back. Now remember, in terms of our strategies, once we are in the broken below the lower asset valuation zone, we don't want to trade the breakout. We want to see a pullback to test that. So strategy number 2, they will also have multiple revaluations to test the average price at the 10 EMA. This was beautiful, pretty tightly contested. So here's a big fight. Of course, bears are saying, well, it's still too expensive. Bulls are saying, well, no, I think we can change this and maybe accelerate all the way up again. In any case, once you see this test of the 10 EMA, look at this. Bears have been strong continuously, staying below the 10 EMA, which is what we want. I don't want us to take that trade, okay? Because we have the low of today. That is a problem, right? The market might just stand there, but that is valid. So let's wait for follow through, and there we get a close beneath the low of today. Fantastic trade. You can put your stop here if you want. We go into the end of the day. You can put, which is fantastic, you can put your stop here if you want. If you want a little bit more conservative in terms of your stop, you can put the stop up here. Same principles. Once you're in, remove half the risk, and by the time you get here, that candle, you're at break even. And of course, you also want to be like the bears and get down to zero. But you do not get that. We go sideways to the end of the day, but you'd have banked your money fantastically. Isn't it absolutely brilliant how these strategies set up? Once we understand, I mean, the moment you understand the asset valuation zones, you just don't mess around. You wait. Okay, when you get here, you start to look for opportunities. It is beautiful. It is pristine. What I didn't put here is the midpoint. Okay, there is a midpoint. Revaluation set up nicely. At the US Open, we have a strong follow through, which is fantastic. We can do that. So that's a breakout. That is essentially a breakout with a pullback at the US Open. So we can happily take that. I mean, that was a bear candle, pulled back, and the bears came back in, and we have enough room to get here. And all of this is absolutely beautiful and pristine. All right, guys, thank you very much. Name is Dr. George Nyabadza. Send those questions through to George at actions2wealth.com so I can respond to them. I will see you again. Have an absolutely fantastic trading and create wealth wisely. Bye-bye.